Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for April 12th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to coil around the midpoint of the current key range. We had a move downward toward the 2335s in the previous session, which is 35.5. Here's the lower 25%. Once we got below the previous week's low and into that level, that's about the zone where we in the trading room focused on looking to return price back to 53.54 by the end of the day and into today's trading, and we got that move as well. So that kind of shows you right now that the market remains within this range. And so when we go to an edge, it's looking to be faded to the opposite extreme. And so that's going to likely continue to be the pattern right now until proven otherwise. Eventually, we could be looking at a significant move to one of the major edges, perhaps this LVN here and outside of the key range. If price were to drop into 2300 to 2310, that could still be a fantastic buying opportunity for a return back to 54 and perhaps into new highs. So still looking for signs of a fade opportunity, but as we continue to chop around this midpoint here, you got to be very, very careful on a swing basis at the moment, but there are intraday opportunities. Still have an overall upward bias in the ES. Now, if we look at the intraday time frame, here we go. Looking at the intraday time frame, you can see for the most part, 53 continues to be the major pivot in this chart. Price got away from that level the previous session, formed a rounded bottom. We were all over this in the trading room, and we saw how price continued back toward 52, 53 by the end of the day. And you can see that price now is just chopping around there in a wider range. So we could be, for the most part, continuing to chop around 53s above and below. And so we could be looking at a fade new highs, fade new lows type of day here, where price just continues to trade back and forth around this area. Again, anywhere around 53s, you have to be very careful and look to fade the edges back to that zone. All right, let's take a look at crude oil. Crude has been incredibly bullish, very, very strong, ever since squeezing back above 48.50, 48.42. You see how much strength was unloaded to the upside. We were only looking for price to get to 51.71 to 52, and then we were looking for bears to come in and attempt to reject price, and they did it for one day, and then the squeeze continued, and it's been straight up for 4.5 plus days now. So we could be looking at more strength overall. Any pullbacks toward 52, 51.70, still a buying opportunity as this thing continues to push against the range toward the top end of the range into 55s. So there could be much more strength ahead, pullbacks to be defended. At the moment, we continue to see strength in this market on a higher time frame basis, which means when you drop this thing to a lower time frame basis, you have an upward bias overall, and you look to defend key pullbacks on the way up. And so right now this thing is trending higher. You can see there's an LVN here at 53.45. So any pullback to that zone could provide an opportunity to squeeze it to 53.80 as a short-term trade here later on this morning. Any failure to hold 53.40 would suggest a rotation back downward, perhaps as low as 52.87, which is 5-day VPOC. Let's take a look here at the NQ. The NQ has also been quite bullish. I mentioned before that this one here continues to have significant pace to its advance, but recently hasn't really gone far. We did have this recent rejection top here, and since then bears have been defending the midpoint. We've seen lower highs, but 61s continue to be a pivot. I mentioned also that coming back against the range into this ledge here, 53.15, these lows, and perhaps breaking them into the little lower levels here, perhaps as low as this LVN, could be a big, big buying opportunity for bulls. Waiting for that scenario to play out may take a little while here as the market has been kind of quiet trading in this middle zone. But still, the current pace and advance of this market is still bullish. Coming against this range would allow a great opportunity to fade the edges for a return back to highs. Right now in this middle zone, very difficult for a swing trade at this moment. On an intraday basis here, you can see that price looks very similar to the NQ, chopping around value at the moment, chopping around 5,400 and 53.95's key zone, and you can see that just chopping around that area. So again, fade new highs, fade new lows, which means coming down here past this low could be an opportunity to fade it back up. Coming up there past that high could be an opportunity to fade it back down. That's the approach right now until proven otherwise, at least in the short term. All right, here's gold futures. Gold saw a significant rally, a big time push higher. I was of the expectation that we would see some sort of rejection and to watch 63s to 65s for a rejection. And I mentioned to our trading room, as price was pushing into it, that zone, I mentioned that we're coming off the heels of a rejection from the previous lows, so we're likely going to see an upward push toward those targets, and then we'll see if there's a rejection, but that's not an area to sell just yet. And then price smashed through that zone, smashed through it, and once that happens, through a significant area of rejection, you shift your thinking, you shift your thoughts to fading that area to a potential price discovery phase and look to defend pullbacks, and that's what we did here. So despite pushing through this zone here and not rejecting, still turned out to be a great day here as we focused on the buy the dip opportunities using pullbacks as entries. Now, this is a significant day where price is now pushed to the recent high at 1280. That was a target I mentioned before, could be in sight in our sight lines here, and we finally reached it. But again, this market remains quite bullish, and anytime we do pull back, bulls are going to come in to defend. I thought we had a shot here to pull back, and you can see how aggressive this market has been, and now you have some stops coming out. So on a swing basis, holding above 63 is quite important. Any pullback to that zone is where bulls want to defend, especially intraday, and defending that zone and keeping it bid could provide an opportunity for a continuation toward 1300 to 1306. So it could be quite a move to come if 1263s remain bid. On an intraday basis, you can see that short term here, the market is chopping around the previous session's close price right here, mainly with bears keeping it offered at the moment. Any push above that zone will start to squeeze back toward 1280. Given the rejection we've seen here at 1280, perhaps 1280 could be a selling opportunity back down. But right now we are at an edge. And I mentioned that this thing remains bullish as long as price remains above 63s. So any pullback, even as deep as 63s, could still be a buying opportunity for gold, at least in the short term. That's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.